So 2 weeks ago, I came across an interview with Michael Saylor. He is the CEO of MicroStrategy, and the ticker symbol is MSTR. And he came on my radar because he purchased $500 million of Bitcoin. And two things I've noticed that I wanted to talk about. The first is that the market cap of this company is $2 billion. According to Michael Saylor, who bought Bitcoin, which doubled since he purchased it, $1 billion of those $2 billions is the worth of their Bitcoin holdings. And I also noticed the stock has been trading in the last 10 years around the vicinity of $100, and it is now $250. And I couldn't help but thinking how much this is a problem for a central banker. I mean, here is a company that just doubled its market cap by doing nothing. In fact, worse than doing nothing, it hoarded, in that case, Bitcoin. If you understand a central banker and the challenge the central bankers are facing, this is sacrosanct. This is unacceptable. Okay, the idea that companies are going to be rewarded for doing nothing, and again, worse than hoarding, this is a declaration of war. This is something that must be battled with in the perspective of the Federal Reserve. Obviously, there are other CEOs who are looking, and we know for a fact that some of them have already been purchasing. I think that this is a big problem for a central banker. And I think that this is going to be noticed by many regulators and, again, central bankers. This is something they would have to deal with. This is a big problem. This is the crypto market leaking into the real market. And much worse than that, the real market is rewarded for doing so. This is something that is counter to the Federal Reserve system. You know, some people think that the Federal Reserve business is interest rates and buying bonds and deciding the reserve that a bank should have. But I would make the point that the Federal Reserve does no such things. These are its tools. What the Federal Reserve does is control what people do when they wake up in the morning. When a central banker says we don't have enough inflation, or that the inflation is below their target, what it means that people, when they wake up, they don't take enough vacations, they don't produce enough, they're not active enough, they don't trade between them enough. And what they do is they print pieces of paper and give it to parts of our society, believing, and again, in the last 40 years, they have been proven true, that they'll be able to change the behavior. So if they decide that real estate is going to be much higher than it is, let's say between 2009 to 2012, then they raise the prices, and then you have millions of people who got a lot richer, who have a lot more pieces of paper, that would be the right phrase, and therefore they are going to buy more and travel more and do more. And that's what the Federal Reserve does. You know, another curiosity, so I heard that Janet, which was the Federal Reserve chairman, is now going to be the treasurer, the secretary of, what is it called? Treasury, the secretary of Treasury. She's going to replace, what's his name? I forgot as well right now. Point is, so much for the separation or the independence of the Fed. I'm not sure if it ever happened before in that order of federal, so the Federal Reserve chair becomes the Treasury. But either way, I mean, they've been talking to each other for many years now, and they've been coordinating their printing of pieces of paper and who should get what in order to manipulate society the way they think society should function. Yeah, I mean, just wow. I mean, just wow. I mean, they're not only colluding with each other, they're actually the same people. That's, well, you can think about it whatever you want, but the separation or the independence of the Fed is out the window. I mean, that is a non-argument these days. What I would obviously point out that there was a reason for these separations. You know, even though I don't think that the Federal Reserve has a place in our economy, when it was introduced with these separations of power.